So there's this trend lately to take hard stances on Tesla because they know it drives the clicks, and I can't say I'm not guilty of it myself, but this is an especially crazy one from Stock News. Why it might be time to sell Tesla and other EV stocks. Woof. First of all, great stock photo. This guy looks devastated. Electric vehicles have been one of the best performing groups all year. However, there could be a major correction if Democrats fail to win the Senate, which means Biden's energy plan is unlikely to pass. Here we go, Jiminy. This is crazy. One of the best performing sectors in 2020 has been EV stocks. This is evident from the Crane Share electric vehicle and future mobility ETF's 90% gain from the March low. Well, you took the March. Why didn't you take February? It's barely up from... This is already not a good article, Mr. Jiminy. While this sector has generated impressive gains for investors so far, I think there is one potential development that could potentially cause this rally to slow down. Republican polling in Senate races is improving. Now, this is, of course, ridiculous. The Senate is close. It's going to be a tight race, but that doesn't mean sell your stock. Until October 3rd, predicted odds for the Democrats winning the Senate had consistently climbed higher. From August 29th to October 3rd, the odds for Democrats winning went from 49% to 70%. In recent weeks, it slipped to 57%. Well, that's great. Predictit is a betting site and not a polling firm. This is what people think is going to happen. As you can see from 2016, the betting markets were very, very wrong on the outcomes. And we know that because some firms even paid out winnings before the election to those who had predicted Hillary would win. Yeah, that didn't work out well. They ended up having to pay everybody. EV subsidies. In contrast, former Vice President Joe Biden's odds have remained steady around 60%. So, again, that's Predictit's figures. It's actually higher than that in polling, but fine. From state polling, he also seems to have a large lead in many states, which gives him multiple paths to victory. However, the fate of Biden's energy plan, which calls for $2 trillion in spending over the next 4 years, also depends on Democrats winning the Senate. Now, that is true, but that $2 trillion, I'm just going to tell you now, no matter who wins, ain't going to happen. That is too large of a spending bill for something as narrow as green energy over a 4-year period. A lot of people like the idea. It's not going to happen. A watered-down version is what you could expect to see. The plan is very generous for EV companies. It calls for a cash for clunkers style program to offer incentives or rebates for people to replace gas-powered vehicles with EVs. In addition, there's a proposal to replace U.S. government vehicles with American-made EVs. Another part of the plan is to build 500,000 EV charging stations across the country. Now, this is great. I love it. But the problem is, buying EVs, American-made EVs, there simply aren't enough. Now, Texas will be coming online next year, hopefully. But over the next 4 years, they're already supply constrained. Adding these incentives is great and will certainly expand the sort of buyers who are able to buy these vehicles, but it's not going to make or break Tesla. However, the chances of passage dramatically go down if Democrats don't win the majority in the Senate or even end the night with only a slim margin. So, a slim margin is a done deal. You can have 51 votes and it doesn't matter if the filibuster is not rolled back. So this is ridiculous. This would have to be negotiated. It would be watered down either way, but it doesn't matter. Democrats like Montana's Steve Daines or West Virginia's Joe Manchin may not support such legislation. Great. It doesn't matter. This is not what's going to make or break Tesla. Today's share values are not assuming there is going to be a $2 trillion influx in new subsidies. Short-term election risk. If this were to materialize, there could be a strong pullback for US-based EV companies like Tesla, Plug Power, and Workhorse Group. Come on. You're telling me that the failure of a subsidy that no one knows could exist will make traders skittish, that doesn't make any sense. So I'm trying to figure out what they're doing here. While a Republican majority in the Senate could have a short-term impact on the EV industry and push back the timeline, it doesn't change some of the factors that make it an enticing long-term investment, aka don't sell. There's been incredible progress in EV efficiency and range. Within the decade, we're expected to see the crossover point, at which point it will be significantly cheaper to drive an EV rather than a gas-powered car. It's expected that in 2030, 20% of sales will be EVs, which means 3.5 million EVs will be sold. And that's specific to the US. Now, this is ridiculous. Tesla is growing at a breakneck pace. Their demand seems very strong. Why you would sell now, I cannot imagine. The FSD rollout is going very well. The new factory's constructions are well on pace. Everything is going great. Now does not seem like the kind of time you want to be selling. Tesla is the leading EV company by several measures. This year it's expected to produce 500,000 cars. It's increasing production by opening new factories in Germany and China. In the US, it's got 80% market share. Globally, it's got 18%, and that's not accurate. That's an old number that's a bit out of date, with Volkswagen at 12%. Now, these numbers they're just out of date. These are, I guess I've got them over here. Let's see. Tesla had 28% of fully electric sales in the first half of 2020. And where's the other one? Here we go. Tesla's 19% of shares. This is dumb. This is 19% of global plug-in sales, but it's only for the first half of the year. So let's go back over to this other guy. This one, it shows, the first half, it's only counting 179,000 units. In the last quarter alone, they did 145,000. These numbers are just a ridiculous. So Tesla is the leading EV company. Prices have also trended lower. Increased production leads to lower unit costs. You'd be crazy to sell. Here's the stock chart. Well, let's go back to March again. That 90%, boom, you'd have made, 5x'd your money? 4x'd? Come on, man. Get yourself together. Many Tesla bulls would consider a correction to be a buying opportunity. Yes, it would. So I'm trying to figure out what these guys are all about. And then I see another article from them that says, and this is fun, Tesla versus Hyliion, which stock is a better buy? And this author, Aditi Ganguly, goes on to say, yes, sure, Tesla's been dominating the market with a 28% market share as reported, blah, blah, blah. And they're super safe. Here's the chart. But you know what you should really buy is this company no one's ever heard of, because even though they have no profit and no real money, they could make billions in the future. And it's like, right. Or, and hear me out. Let's see, current growth. They expect 1 million in revenue this year, but they plan to roll out an electric powertrain next year, and they could make 344 million in 22 and $1 billion the next year and $2 billion the next year. What are you guys doing? Stock News, get yourself together. Tell me what you think in the comments. Do you think Hyliion is worth it? Do you think Tesla is a better investment? Could this company even be something? And what are you invested in? What's your hot EV stock tip? And one last fun one. What do you think Tesla's going to close the year at in terms of stock price? All right. Well, this is my Tesla weekend, so I've got other stuff to get working on, and I'll see you guys in a couple hours.